These are exciting times. We're looking at benchmark indices at lifetime highs, but the question now is, where do we go from here? Well, for that, we have among us A. Balasubramanian. He's the Chief Executive Officer with Birla Sun Life Asset Management. He's going to tell us where we can see the benchmarks move on from here. Well, I'm going to firstly thank you for joining us. And my first question is going to be, with the kind of levels that we are looking at, there is a lot of investor thinking that there could be some time-wise correction, if not price-wise correction. Are you of that opinion?
I think the way I look at, while of course it's something one has to celebrate, which is 30,000 index plus, is definitely the new high. And this also has come after very, very long waiting.
Yes.
I think if you look at the last 3 years, and every time we always had an expectation that market will touch a new high and will cross 30,000, and now it has come, and that's something which I think one has to feel happy for it. Second is, the way I look at it is, while index has moved up, it can actually continue to remain buoyant. Market corrections could probably be here and there, which normally happens in every market which goes up, and we'll be seeing actually some bit of big correction, or maybe something one should worry about it. It doesn't look like, for one simple reason, that expectation in general on the economic growth remains reasonably good. So therefore, though market has gone up, the way we look at it will remain buoyant for slightly longer period of time.
Okay, so based on that, what are those triggers which will help markets remain buoyant? You mentioned one of them is the economy.
Yeah, I think one is of course expectations. I think from the government point of view, whatever they have been doing for the last 3 years, somewhere it has to start reflecting in terms of numbers. So that's why we feel that it will start reflecting on numbers, both one of course on the GDP, and second is actually in the industrial production number, which is of course driving actually the spending that is being happening from the government in terms of road and other areas. We will probably start seeing some success in that. So therefore, that has to reflect on industrial production number. Second is the government push towards, which in the budget they have addressed around low-cost housing could potentially be the game changer for India.
Right.
And that also I think should keep actually one expectations high, and second is should also actually start resulting in some better outcome.
Right.
So all put together, if you see, the overall expectation from the economy continues to remain good. And the last but not the least actually the stable interest rate scenario that we have been witnessing for the last many number of years, and even now, even going forward, though globally the interest rates are an upcycle, definitely from India point of view, we are not seeing an upcycle at least till 2018.
Right.
So which essentially means stable interest rate scenario, therefore the low cost of borrowing, and also the top line could potentially grow given the fact that the government push is there. All combination put together, their expectations remains reasonably good.
Okay.
Right. Bala, another positive development that we've seen in the recent times has been that increased retail inflows into equities, of course, via the SIP route. So how can one play this theme of shift from physical savings to financial savings?
So I think this is a trend which I have been seeing actually. I think one of the last few years where we have seen a significant improvement in terms of flows into mutual fund asset class, especially in equity, is an outcome of that incremental savings are not going towards physical assets such as gold and real estate. And that I think is something seems to be happening even now, and probably the trend will continue going forward even much bigger. And that's something which I think all of us are expecting in the MF industries, including Birla Mutual Fund. In terms of existing assets, I think a lot of people have also got locked up in real estate and gold. And gold is something which people don't want to sell, whereas real estate is something you want to sell, but you don't find liquidity when you go to actually the market for selling. Therefore, we see actually as the revival is being seen in the real estate market for some reason or there, I think that could be driven largely by the low mortgage rate that we are seeing today. Maybe that might actually lead to an improvement in the offtake for real estate as an asset class. Once that comes, I think once we see actually buy and sell transactions starts happening in the real estate assets, we'll probably see the people who are selling the house because they already have one or two houses, and therefore he has to reduce the exposure to the real estate and to the financial asset class. Right. That trend I think should begin to happen in the next few years. But in terms of incremental investment, I think we are already seeing actually the large pool of investors are already considering financial asset class, especially the mutual fund, as against the traditional way of saving their money, either in the gold or in the real estate or any other mode of investing other than the capital market assets.
Right. A lot of your funds have substantial allocation towards the IT sector. Now, some of these companies have come and, the guidance that they have given is, relatively lower guidance that we've seen in the previous few quarters. On the whole, the valuations are relatively cheaper. So how would you go about dealing with the IT sector now?
So I think it's a bit in a dilemma in that sector, because one, the company's balance sheets are very, very strong.
Right.
And sitting on cash, therefore it has high dividend yield. And at the same time, there are headwinds such as H1B visas, as well as the changes. Actually, the whole technology platform is evolving, which fintech coming in. Then the traditional way of building software applications are coming to some kind of question mark. Therefore, how each of these companies are actually evolving themselves in the emerging space, as well as the way I think the US is looking at outsourcing software requirement from the rest of the countries, such as India, is something I think we'll have to give some time before we come to the conclusion. At the same time, Indian IT companies have played a very important role in the global space in the last many number of years, and they have actually played a very vital role in helping the banking and financial services sectors globally, as well as other sectors in the whole automation drive of the world at large. So therefore, Indian companies, the role that they have played in the technology space globally cannot be ignored at the cost of the short-term noises. Therefore, from money managers' point of view, while we do have a question mark for all the challenges that we are having, at the same time, you cannot afford to go underweight, given the fact the balance sheets are much stronger than what you've seen in the past.
Right.
And that's something I think we'll have to live with that for some time.
Okay, I want to continue addressing the Q4 earnings that have been reported so far, and I'm specifically talking about private banks, because your fund continues to have higher allocation or skew towards private banks. So, what have you made out of the earnings that have come so far?
I think one of the segment, if you see in the whole lending part, where we have seen continuous growth in excess of over 18%, is around the retail lending side. I think retail credits have been pretty decent. And then mortgage lending has also been growing reasonably well. You find actually the personal loan side, where there has been a reasonably good growth that we are seeing. Only the area where the loan growth has been low is around the corporate sector. And the institutional investors and corporate sectors are not being the big borrowers. There are big borrowers actually are looking at raising equity money to pay off their debt and so on and so forth. So therefore, those banks, especially in our case, we have been focusing more on retail-oriented banks and NBFCs, and that continues to remain one of our focus area even going forward, given the fact that the earnings growth on those kind of sectors and companies are going to be far superior to the larger headline number that we will see as a banking and financial service sector as a whole. And having said that, within the public sector banks as a fund house, wherever the balance sheets are bigger and the NPOs are relatively lower, at the same time they do have taken proactive steps in building a retail base. Selectively, we have also been bullish as far as the public sector banks as well, selectively.
Okay. So you are saying that even your incremental investments would probably, a majority of the chunk would go to private banks, but you're willing to look at PSU banks where you're seeing some improvement.
Exactly, exactly.
But Bala, could it be the case of disappointment when it comes to PSU banks earnings? Because the fact itself that the RBI had to come out with a asset quality review part 2 of sorts probably suggests that the worst is not yet over, or at least has not been recognized and provided for.
Exactly. I think that precisely the reason why as a fund house we still take a cautious stance as far as the public sector bank concern is something which is, as you rightly mentioned, about the new provisioning which can potentially come around sectors like telecom, and is something which is around which is around the new policy that has come. Right. Therefore, how it's going to have an impact. And second is some of the existing recoveries that they have been seeing, how those existing recoveries will come faster than what was expected earlier. These are some of the question marks are there. So therefore, from a public sector bank's point of view, these are some of the things I think will still remain as a hanging sword to take a larger bet. So we need to, of course, take a call at every point of time as to how it can evolve. And see actually that what inflection point I think you need to take an exposure on that. So one of the things that we have been as a fund house have been very very agile to this kind of with this kind of emerging trend, is to keep a close eye on some of these banks on the way I think they are looking at the balance sheet and how they are building the business is something which they are keeping a very close eye actually.
Right. We have the Real Estate Regulatory Act, which is going to be implemented, very soon. And I know that you do not hold too much when it comes to real estate companies in a lot of your funds.
True.
Now, we have seen some gains recently, but the RERA is going to pose some challenges. So, we'd like a view on this sector specifically, and especially because we have seen some gains coming in recent times.
Yeah, I think real estate is something we'll have to look at from 2-3 angles. One, the RERA is actually regulation,
right,
which is the new one which is coming into place.
Yes.
Definitely, actually, it's in the intention of benefiting the consumers at large, the buyers at large.
Right.
Then comes actually is the manufacturer. Any companies which are well-run companies with an institutionalized format have surveyed for many number of years with high reputation, wherein you build your properties and give to the customers as it is designed at the time of selling,
right,
from the point of view of delivery perfection.
Right.
I think those are the people I think will survive,
right,
and they will continue to remain one of the bigger player to operate in the market.
Right.
From a Birla Mutual Fund point of view, of course, as a sector, even if you own certain stocks in the sector, we do have certain real estate stocks in the portfolio,
right,
but they can still never form a big proportion of our portfolio.
Right.
And given the fact the sector itself very small in size in the listed space.
Absolutely, yes.
And that's the way I think you are looking at it.
Right.
But definitely the sector, especially the companies who have large commercial real estate, commercial the space which is currently already rented out, especially the REIT coming in, right, some of the companies will be able to actually encash some of the REIT opportunities and improve the balance sheet further and grow the balance sheet further.
Right.
And these are some of the companies, as long as they are in the listed space, as a funders, we are not averse to looking at some of those companies.
Right.
Okay. And Bala, what's the best way to play the consumption theme now? Given that we've learned how demonetization has impacted all of these, there are about 2-quarter earnings that we have seen, and there's more clarity now. So, what would be your order of preference within that entire consumption related sub themes, whether it's auto, consumer durables, staples, or even NBFCs?
I think the best way to play this entire segment is through the diversified equity funds. Though it actually covers, the entire consumption covers handful of 4 or 5 sectors, and there are 4 or 5 sectors largely forms part of the either the Sensex or Nifty, any of the indices with reasonably good proportion. Therefore, the best way to play this sector is actually through the money manager bets which they are taking actually in the diversified equity fund, especially we call it the multi-cap fund. And that's one way to play that. Second way to play this theme is to look at banking and financial service fund. Even Birla Mutual Fund do have that product. So look at that as a product. I think is something which is basically played through the consumption theme,
right,
as well as is played through actually the through the infrastructure theme. So one of the things which I think investors can always consider is the banking and financial service fund as a proxy to the not just economy. Right. Also the proxy to the retail lending growth that we are seeing in the country.
Yes.
Yeah.
Yes.
All right, Bala. Thank you so much for your time and for joining us. So he advises to continue to invest in private sector banks because that's where his preference lies. Though PSU banks could be good tactical plays and could be looked at the right time too. Not wary of real estate stocks is what Birla Sun Life Insurance has to tell us. Mutual fund has to tell us, I'm sorry. But that's all from us for this session of Thank God It's Friday. We'll see you yet again on next week. But till then, stay tuned into BloombergQuint and wish everybody a happy week.